We're recording this because we want to capture, Rihanna, this material. Okay, my name is Bronwyn Madden. I'm the coordinator of the Small Business Development Center here in Missouri State University, West Plains. And Naomi Minahan also works in our office. She's the business assistant. And together we are your SBTC locally. And we're a satellite office of the Springfield Small Business and Technology Development Center. It's a mouthful. Rihanna Anderson is our director. In addition, she leads our finance team, and she actually drafted the curriculum for our network for finance, so she is the expert. And if you ever come to see me about business planning and want me to look at financial statements, I always forward it to her to have her check my work and collaborate so that we know it's good. So
she doesn't really need it.
No, but it's like a crutch I don't want to let go. She's excellent, and I'm really happy that she's here to share with us, and I too hope to learn. So I guess, I mean,
okay.
Rihanna has been doing this a long time. I know you have a lot more to your background.
I have an introduction slide. We're good.
Okay.
Yeah, I have an introduction slide. I don't leave these things to just, what Brahma might say, right? Because the goal in a good speaker is the first thing you want to do is to establish your credibility. So at least they think you might have a smidgen's knowledge of what you're doing. So I think she attempted to do that for me, and I appreciate that. But welcome to the first in the series of 3 classes in regard to financials. My favorite topic by far. I've been doing this a long time, 25 years to be exact, and I did actually prepare and write the curriculum for the state, and so I should know my slides at least, right? We're going to go with that. So let me introduce myself the way I introduce myself. Bronwyn's was much nicer, but I am the director of the Small Business and Technology Development Center at least for 9 more weeks. That's a whole nother topic.
Did you leave it?
I'm retiring.
I don't want her to go. I'm trying. That's why we're recording her, because I don't want her to go.
So I've had a wonderful career with Missouri State University, and I have an opportunity to go do some other things and take an early retirement, and I'm going to do that. Okay, so I'll be around though. I did develop the series. I counsel with lots of businesses. That's because I've been with the SBDC for 25 years. So that's my favorite thing to do, actually. Is if I'd love to work. I love to work one-on-one with small businesses, and it's like becoming a partner in their business and experiencing their successes. Hopefully, our center in 2013 was the national award winner for the Small Business and Technology Development Centers, which is a very high honor. We're the only center in Missouri that has ever won the award. In that same year, we were also the Small Business Advocate of the Year in Springfield. And in 2011, I was voted as a most influential woman. I'm not sure what that means, but in Springfield, they consider it a big deal. It took me a long time to get there, so I said, okay, sure, that sounds good. Here's what we're going to try to do today. We got 3 hours, and that's not really a very long time, but I'm going to start at the very beginning. I was telling Naomi at the beginning of this, we're going to start at the beginning. So no matter where you are and where your knowledge is in the financials and financial statements and how you use them, we're going to start with the first steps. We're going to move pretty quickly through financials. And today we're going to really cover a couple topics. Income statement or profit and loss, depending upon the most recent publications you read. We'll talk about that. Terminology is really part of the battle, just like anything else. And then balance sheets. Next week is my favorite class. I have to point that out. Because it's all about cash and cash flow and understanding that. But we've got to set the ground rules today and figure out kind of where we are. And then we're going to use some of the information at the end of class. We're actually going to do some financial ratios. We're going to pick up the numbers. You are going to be an accountant for at least 10 minutes and figure the ratios and interpret them. So that's something that you can take back home and do, hopefully. So here's what I hope you're going to come away with. You can understand and identify key business information on a profit and loss and a balance sheet. And secondly, you know how to calculate and use some key financial ratios. And ultimately, Why do we even do this? We do this because we want to be able to make better financial decisions in our businesses. They are our biggest reporting methodology. We pay lots of money, we spend lots of time on financial statements, and it is not uncommon for us to not really totally understand them. So that's just the reality. Okay, so what we're going to do is we're going to go through the profit and loss first. We're going to talk through cash versus accrual accounting. Because that's getting your head around that can be very helpful, especially when it comes to the analysis part. We're going to use an actual case study. This was an old client. We're going to use, I have massaged it enough that it no longer truly resembles it, but it actually was a real case at one point in time. We're going to use the case in all three classes, so you will become more and more familiar with the actual information. Because if you don't look at financial statements every day all night long, just looking at the actual report can be a little overwhelming first time maybe you look at it. So we're going to keep using those same statements to enable you by third class, you're going to know everything. Trust me, you will. We're also going to use some financial ratios. I've identified 6 ratios today that we're going to actually take from our financial statements, we're going to figure them, and then we're going to interpret them and make some discussion about, what's going on in this business. Because that's really what we want to know, is what are these reports telling us? We're going to get over that hurdle of just looking at sales and just looking at net profit, because there's a lot more to it than that. Okay, in front of you, you have some class materials. You have a copy of each of the PowerPoints, so there's nothing there that you would need to spend your time preparing. That's what this is. And then you also have a corresponding seminar workbook is what we call it. We're going to use this. We're going to use some pages out of this to do some review, looking at this is where your financial statements of the case that we're going to have. So this is yours that we're going to use throughout today's class too. And then you should have some, my team in Springfield prepared this, so they have evals too. They want to make sure I get evaluated. And we have, these are classes that are offered in Springfield at Missouri State. And then our brochure for the state. And my business card should be included. Should you want to ask me any questions, feel free. We will take a break at 1.5 hours from when we started. We're motivated because our tape's going to run out, okay? So at that time, the restrooms are located to your left and down the hall. There's a big sign. I want to encourage you, this is your class. This is your 3 hours, which sounds like a really long time, I know, when you're sitting there. But it will go fast. And so this is your class. If you have a question, please ask. Your partners may have the same one. If I feel like we're getting off topic, I will pause us and say, hey, maybe that's something we need to talk about at halftime, or that may be a better answer in a one-on-one counseling session. And we'll use that methodology, okay? Any questions or comments before we get started? No? Okay. My first question, and I have a question for you all. I want you to tell me your name. I don't have my glasses on. I can read those, so I'm pretty good, okay? The business you have or want to have, and what's your level of accounting knowledge? And I use the term accounting. This is not an accounting class. But that gives me a feel for kind of maybe where you are in the finance world. Sometimes we're all over the place, so don't feel bad. It just helps me kind of understand where you are. Okay, Luke, I'm going to start. I always start to my left.
My name's Luke. I'm with Mega Motorsports.
Okay.
And I've always been more of an operations guy.
Oh.
I need to become more proficient in understanding P&Ls.
Okay. Who does your P&Ls?
Who doesn't? Jenny.
Oh, we love Jenny. Okay. Jenny's our best friend. Okay, very good. Are you the owner?
I'm the general manager.
You're the general manager. Okay, very good. Okay, well, I think we can help you. I think we're going to resolve your whole problem today in 3 hours. Okay, Jenny.
manager for Mega. I do all the P&Ls and all the accounting portions and do the invoices, accounts receivable and everything. I need better understanding. I do not have an accounting background,
Okay.
so.
You've learned, though.
I'm
I bet you know more than you think.
I may. I hope so. I hope so.
What software do you use?
It's Lightspeed.
Okay, so is it vendor specific? Is it industry specific software? Industry, okay. We're going to use, our format today that we're using is QuickBooks because by default, and we have a celebration, by default, that is the king of software for small businesses. The statements are going to be the same. It's just formatting, and I know that sometimes things are just formatted a little differently. It's going to be the same information. So stop me if you have any confusing points in that when we go through it. Okay, Diana, who uses QuickBooks, I
can stop you right
suspect. Okay.
Yeah, QuickBooks. Do you teach a class in QuickBooks?
We do. We do.
Good.
Yeah.
Where do I sign up?
We teach it 4 times a year, and it's coming up in first week of May.
Okay, I'll get an email or something on that?
It'll be in
It'll
Springfield.
be in Springfield.
Yeah, that's far. I know that's far.
We do have Crystal Irons, who's
Yes.
in our group.
Who teaches our class?
She does counseling, and she has done a lot of co-counseling with me on that. If you have access to a computer, and you can come into our office if you have hours if needed. She does is Google Chrome desktop, remote desktop. So basically, she can show you. I had a client.
It's really cool.
Yeah,
works well.
She's taught several
I
clients.
guess we should talk at break.
Okay.
Yeah. Okay, tell me what you do.
My name is Diana Wigan. I'm from Mountain Home. We started 2 years ago, Bright House Farms Produce. Now we sell eggs, produce, fruit, and anything vegetable and fruit.
How do you sell? Who do you sell it to?
We sell it on the farm. I make deliveries.
So you're
I
selling
sell
it directly.
I do wholesale.
You do wholesale some stuff too?
Eggs to our,
Okay, I'm just trying to get my head around to relate it to our case. So you wholesale and retail
yeah, and farmer's market.
and farmers market. Okay. And you guys are retail?
You know, we sell
Technically?
power sports products, motorcycles,
And you have a floor plan, you own your own inventory, you,
both, it's a mixture.
both? Okay, got it.
They have an awesome video where they had Google come in, so you're like in the store.
I would love to have I would love to take those, I have a little farm. I would love to have something. My husband dreams of it. We could go down to the farm and ride that we don't own, you understand? That's the problem. Okay, Bronwyn.
I survived business school. I got through accounting. In my personal business, this is the most basic, but I've used PayPal invoicing software. It just helped me because, like, as a consultant, I find that I don't always get paid when I send the invoice, and so sometimes it'll be
Yeah.
for 3 months. So PayPal has simplified my life just for that. And I guess, I mean, I haven't really had to do anything too complex. I review business plans all the time now. And I try to look mostly, my first thing before, I don't even care about the narrative so much as I look at the financials and try to see, are we profitable? And then
That's what most people do, by the way. That's the first place most of us go to when we start and look at a financial statement. We go look at net profit.
Like, in a business
But that's just
plan,
part of the
you have
story.
the
That's
tax
why I
part,
say,
the
it's
rider,
not
the
that it's
introduction,
a
which
bad
is
thing,
a lot of
it's just what we do.
And then you have the projected financials. And I heard a banker say this, and I think, I mean, when you write a business plan because you want to focus and kind of plan out your roadmap for success, as they call it. But if you're looking for financing, the person giving you the money wants to make sure they get repaid. So,
Yeah, number one thing. They want to
yeah.
know how you're going to pay them.
Yeah.
Imagine that.
So I jumped to the
You know.
financials first to see, is it profitable? And
Yeah.
then a term I learned when I started here is the debt service coverage ratio
Mm-hmm.
of 1.2 or higher. And if it doesn't, those are the first 2 checks. And
Yep. 1.2 is pretty low, too. We'll do a little bit of analysis in that regard at the end of today's class because we're going to look at debt to equity ratios, which is not a debt coverage ratio, but it is even the beginning of the most beginning points of analysis when you're going for a loan, too. Okay, Naomi.
Well, I have a direct sales business, and my background is architecture, idea about financials.
Okay, so see, I told you, Jenny, you're going to be the superstar, right? Okay, well, there are no dumb questions. You know that. I'm a big believer in that. I mean, it's the only way I've survived in my life. I am not afraid to ask a question, and please, I don't want you to be afraid to ask a question either.
I had a class on accounting, the lemon stand for kids.
Yeah.
Struggled.
Oh, okay, so we may have some challenges. Okay,
Some, yes.
okay, well, we'll get there. We'll get there.
That's one.
Okay. Let's see if I can get this to move forward. There we go. Okay. So part one, understanding profit and loss and balance sheets. Okay. First of all, there was a beginning. If you're using an accounting system of any kind, and you are, there was a beginning point. There was day one. And in day one, you set up your business. And there was something called a chart of accounts.
Yes.
It's just a listing, all it is. A listing of the type and names of accounts that you're going to use in your particular type of business. And in QuickBooks, in fact, you press a little button. Now, yours was probably already set up because it was an industry-specific stuff of the type of accounts and the accounts that would populate. Okay? That's the beginning. So it's based on the type. For instance, if you are a service provider, you probably would not have an account called inventory because you don't resell something. Okay? So it's just those type of things. Just varies a little bit by type of business. Chart of accounts. A chart of accounts is just the listing. And when you make an entry, we call it, or you post, those words, we use those words kind of interchangeably, it increases or decreases the value in that chart of accounts. Okay? And then at some point, you post it through what's called a general ledger. Okay, the general ledger is just a ledger that documents every entry you make. And you can pull a report that just shows that. It doesn't make a whole lot of sense, but that's all it does. It's a general ledger. Back in the olden days when I started doing accounting work, by the way, I carried around a general ledger. It was long, light green pieces of paper, lots of lines, and we posted, and we always everything affects at least 2 accounts. It can affect more than that. That's the general ledger. And in our accounting software, that's what happens. It posts through a general ledger. And then it summarizes it. It has all those accounts. It gets a total that's in the general ledger. And then it creates reports. And so what you're really reviewing when you see a profit and loss or a balance sheet, it's just a report of the balances of the accounts that started in the chart of accounts, that posted to the general ledger, and now you have a profit and loss, which is a report, a balance sheet is a report, financial ratios are reports. They're just picking up the balances from that general ledger. That's all it is. Now, what I caution you, what you don't want to do is start futzing around probably with the general ledger, moving things around and different, because it knows it's in the right place. Okay? I'm just saying. Sometimes you're tempted. You're like, well, I think I'll move that under equity. Oh, contraire. It knows that it's in the right place, is what I would tell you. Okay, so adding accounts, probably if that is not your expertise, probably ask your accountant before you do that. Sub-accounts are fine. QuickBooks is a great example. They do a great job with sub-accounts, and maybe yours does too. Let's say I have an account called advertising, and you probably do, and you really would like to track all your type of advertising. So you want to track newspaper advertising, and you want to track the magazine stuff you did, and you mailed a postcard, and you printed it, and you want to track it on how much all that cost. The key would be to make sub-accounts that roll up into advertising. Okay. If you don't, it's pretty easy all of a sudden to have a 3-page profit and loss if you keep creating new accounts. So just a point to be taken, that's a great way to do it, because what you originally, someday you're going to have to get your head around this profit and loss, and it's much easier if you start with a 1-page version. You can always drill down. But it's not reasonable that you have a 3-page profit and loss to be able to understand. That's the truth. If you ever seen any, large companies, P&Ls and stuff they publish, you know how many accounts they have? About 7, I mean, there's hundreds of accounts probably under that. But everyone has that opportunity, has to think through, okay, start with the big picture, drill down to the little. I'll show you what I mean.
Are you talking about general?
I'm talking about a profit and loss or a balance sheet. You want it to always sum up. You can have sub-accounts that roll up into those. But you probably want to do it that way so that you begin with a big picture instead of printing out all the sub-accounts and everything, and you turn into a 3-page profit and loss. I've seen them. It happens.
I had a client who came with so many pages.
Right.
He got confused, he didn't know how to use it, and he was
Right.
using QuickBooks. But
Yep.
He said, I don't know. how to
QuickBooks will
use
let you do that all day long, by the way. Yeah.
Is that under general chart of accounts?
Yes.
Do you not make-
You can create a sub-account under any account. It will allow you to do that. And that's okay, as long as you know what you're doing, number one, and that when you pull the report, don't pull it by sub-accounts, pull it by the majors.
Oh, okay.
It's a click. Got it. So we source it from the general ledger. Here's the issues. We put trash in, what happens. So we want to be very careful, and that's really what I've spoke to here, about being very careful of how we post things and the number of accounts we have, and that we're entering things as correctly as we can, which usually will require someone at least annually maybe to review it just to make sure we don't have any things floating out there. I would always encourage, I'm sure you all have a CPA that reviews annually at least, yeah. Depends on how complicated your business is true too. But tax becomes a whole nother element, and obviously this is not a tax class, but keeping things good. Garbage in, garbage out is not where we want to be. So we want to make sure our entries are as correct as possible. Even to the point where I have clients who make up an account. If they really have a question but they want to post it, they make up an account that's just a question so that their accountant can go back in, and then they go back in and resolve all those questions. And that's one methodology if you don't have your CPA on speed dial, right? Okay, so there really is what we consider a financial management cycle, and this is what it looks like. The 3 pieces. The first thing we do, remember there was a day 1, the first thing we do is we're going to document past performance. We document that through reporting, profit and loss, balance sheet. That's really what we're going to look at today. Then hopefully we take that information and we analyze it, and financial ratios are really a part of that. They're an analysis process. We're going to analyze it. We're going to analyze the others. I'm sorry, let me go back. And then we're going to predict the future, and that's our 3rd class, basically. So we're going to analyze and review and understand financial statements today. Next week, we're really going to look at cash flow. And the 3rd week, we're going to predict the future. We're going to do some cash budgeting. Okay, so what are they? First of all, profit and loss, easiest to understand. I suspect everyone in this room knows exactly what I'm talking about, what a profit and loss is, so I won't spend a whole lot of time. But it's the summary, it's revenue, expenses, and then ultimately a net profit or net loss, right? It has many other names, income statement, P&L, statement of earnings, and that's what I mean, the lingo becomes part of the battle. I mean, it's like, which statement are we talking about? We're talking about the same one, profit and loss. I use the term profit and loss today in today's class because by default, that is what QuickBooks uses. What does yours use? Profit and loss, okay. Income statement, I guess, is old school. They still teach that a little bit in textbook type learning, but the real world talks about profit and loss. Income expense, P&L. The balance sheet, A balance sheet shows assets, liabilities, and net worth. And those are the two statements we're really going to look at today, and we're going to look at them individually. First of all, profit and loss, though, get your head around, is a period of time. It's from X date to X date, or up to, it may be for a quarter, in other words, it may be a month, it could be a day. We're going to work with annual statements in our examples today. But you can pull a profit and loss for any period of time. The balance sheet's a little different. It's as of a point in time. There was a beginning balance sheet. There was, in day one. Every business had a beginning balance sheet. You had assets. You may have owed some. You had some liabilities. And then you had some equity or net worth position in day one. So a balance sheet is always at a point in time. It's from forever. It's not just this time period. Does that make sense? Mm-hmm. So they're connected, and I'm going to show you next week really how they're connected. I'm going to show you a little bit today. Okay, so the P&L reports revenue, expenses. You have to have one. Eventually, at the end of the year, we have till the, the 18th of April this year. And of course, the corps will have till August to actually do our tax reporting. So eventually, that net income is going to flow to somebody, and it's going to pay tax on a net profit. And it's very dependent upon how the business is organized. We'll go through this, but today our business is an LLC with a subchapter S election, and we'll talk about what that means. But this is not a tax class, remember that. But it shows your income, basically. Different types of income, right? First and most important type of income based upon a profit and loss is that first one there, gross profit. And gross profit identifies your first level of profit. Gross profit identifies how much you have left over after you have subtracted all your direct costs. So let's talk about what those are individually here today with the businesses we have. So your direct cost is the cost of your merchandise and freight in.
Cost of goods sold.
Cost of goods sold, same thing. Cost of goods sold should include the cost of your merchandise you've sold during that accounting period and freight in. That's it. Do you do any service work? Okay, I would encourage you maybe to separate that out so that your service, in a service environment, a little different deal. In a service environment, your direct costs would include the direct labor to do that service. Make sense?
I think so.
Okay. You don't have to separate it out, but what I'm encouraging you to think through is so you can determine where you're making money. And so if you actually attribute the direct cost to your service that you do and your direct cost to the products you sell, it's going to give you a margin or a gross profit on those. Now, this particular example we have, they actually do some service work too, and they're not separating out, and that's very common. That's why I want to point that out. A lot of people don't. I think it's beneficial, but if you don't feel like you're doing enough service or you don't have a lot of cost involved, you may choose not to. The direct cost.
With these seeds,
Yes,
the cost of plants,
that's right.
the seed trays,
Yes.
soil.
You got it. That's exactly right. And I'm sure you're not accounting for your direct labor. If you were,
No.
you would account for that because we would almost consider her, because she's ag, a manufacturer, and direct labor would be included in what she was doing. If she had employees, for instance, that were harvesting and working the products, we would include them as a cost of goods sold, or direct cost. Okay. So the remaining, after we had that gross profit, are what we would consider operating expenses. Gross profit being, by definition, net sales. And net sales, some people will pick up on that. Net sales mean, it's going to pick it up like that after any kind of return or allowance. I don't know if you ever discount off the sale. You track it as a discount. If you did, the discount would be sales minus the discount equals net sales. Some folks do. And you might be in that kind of environment. Depends on where you take it off, is what I'm telling you, Jenny. You know, do you take it as a markdown and reduce your inventory, or do you take it at the direct point of sale? Okay, then you could take it that way. You just want to know, because it's going to change your gross profit or your contribution margin and what that looks like. Okay, so we talked about what really the cost of goods sold are, depending upon what type of business you have. We don't really have any manufacturers in the room. It's the most complicated, because there you're going to include direct labor, raw materials, and any kind of overhead that's attributed to the manufacturing world. That's why manufacturing is hard. I mean, it's harder from an accounting standpoint. Lots of things involved. Okay, so then we have operating expenses, or the cost of us just doing business. Some of these are reoccurring, some of these don't vary very much, and then some of these do vary in direct proportion to sales. Just depends, doesn't it? Rent, for instance, might not vary very much, right, in relationship to sales. However, supplies, typically probably would, wouldn't it? Absolutely. There's a reason that interest expense is not included in that operating list. If you have a loan and you are paying interest is really related to how the business is financed, not how it's operating. And so correctly, it's pulled out of the operating expenses. Now, the truth is, I see this in operating expenses a lot, depending upon how the software has been set up. So Jenny, if you see that under there, you're not overly concerned. Just know that it's really not an operating expense. It's how you're financed and how much money you're paying on your inventory. And net income. Before taxes, right? Yeah, before taxes. That's what you have left over. That's going to flow to somebody. It's also going to be documented onto the balance sheet. That's where it's going to hit. It's going to hit over to the balance sheet at a period of time. It's going to flow to the equity account. Makes sense, kind of, doesn't it? If we made $1, it's going to go into our equity. We profited. It's going to increase our position in the company. Balance sheets. Again, at a point in time, a balance sheet is composed of assets. So all the things that the business owns that we post on a balance sheet. And if you look at it, you notice that it goes really from most liquid to least liquid. So it's always going to begin with cash. Cash is pretty liquid, isn't it? Yeah, if you have cash. Accounts receivable, still got to collect those, don't you? And inventory, and then fixed assets, or assets that typically will not turn into cash very quickly. Things that you're going to use in the business to make cash ultimately. So what the business owns, liabilities, what the business owes. Who do you owe? You may have accounts payable where you owe some of your vendors. You may have some notes and long-term liabilities, or a bank loan are all going to be posted in your liabilities. Now, a couple things I'm going to point out. There are some subcategories in assets and liabilities, and one of the biggest ones you see is the term they use as in current. And current, by definition, means it's going to be converted to cash or it's going to be paid within a year. And the reason it's selected out of there is for you to be able to better analyze where you stand and what your obligations will be within the next year and what your opportunities to convert your assets into cash will be too. And that's why. Then debt, I pull out the term debt because debt is kind of when we talk about debt in a small business, we're typically referring to an ongoing liability, such as a bank note. Sometimes we talk about debt and we use the term all-inclusive, all my debt, but in the accounting world and the finance analysis, we're really usually just talking through a long-term liability. And then equity. Equity is composed of many different accounts. You can see here. At one point in time, there was an equity position. Basically, it's what the owner, the position they have in the company, how much money do they have in equity. It's a book value, is what I want to caution you. Equity may or may not have any resemblance to the true value of the company. Now, on day one, it probably did, right? Because day one, you had assets and you had liabilities and then you had some equity. But after that happened, it all changed. Some caveats that you can think through is, what if you have a very valuable fixed asset, perhaps a building? You may have paid $20,000 for it. 10 years later, it may be worth $200,000. But legally and correctly, you can never change that on your balance sheet. The only way that amount is changed is if there is a sale. You can't just create a different basis point, is what we call it. So it always is documented. This is a very common problem with startups. I'm going to go start a new restaurant, and I got a deal. I paid $10,000 for this equipment, and it's worth $50,000. I can prove it, you know. Unfortunately, the basis is that 10, and it goes on a balance sheet at that 10 because you have to prove the actual value, the cash value. Yes.
Isn't that the same for insurance? When you buy, like, say, jewelry, and they say it's valued at such and such, but you can only insure what you actually paid?
You can, that's a good question. You can actually insure to the appraised value, but what you'll find is the appraised value is not going to vary very much from when you actually purchased it. But what if you inherited it? Okay, it still has that value from an insurance perspective. But if you just bought it and they know it, in fact, the appraiser is going to do what? They're going to ask you for the actual bill of sales. And it won't vary very much on that because that's a market. Okay, so you can see there's things in that equity position. Let's go through them a little bit. Draws, remember, what is a draw?
Owner takes a check.
You bet. That's exactly right. Owner takes a check. Depending upon the form of organization, a draw may be the way the owner gets paid.